want to come over to you. Are you also a believer in this ninth inning philosophy that we're pretty much at the end of this entire cycle, and that's giving investors a lot more confidence?
It definitely seems like we're at the end of the cycle. I think the 2-year getting close to 5%, we're probably going to look back and say that was the peak in the 2-year, which ultimately sets what the Fed does. I am skeptical, though, as the S&P gets closer to that 4,100, which is where we got, I think, 4114 or 4120 at the end of January. As we get closer to that, and this has definitely been led by the sectors that Josh went through, I would actually be fading putting new positions, because what I am seeing, especially in technology, like crypto a couple years ago, if you mentioned crypto in your earnings call, you got like 2 turns of multiples higher. Now everyone's talking about AI at all times. And so I do think in the short term, it's getting a little frothy. So for me, I mean, I'm really happy for our clients, for myself, that we have this nice rally. But I would be looking to sell calls on some of my tech names, especially as the S&P gets closer to that 4,100, because I do think that this deposit issue with the banks is not solved. And there's 4,200 banks around the country. The top 10 have 50% of the assets. The remaining 4,190 have the other 50%. Until these banks understand what the denominator is, which is their deposits, it's going to be pencils down on making new loans. And I do think that will slow the economy. And so I don't think that's fully priced in to multiples for the S&P at this level and what that does to growth.
All right, certainly something to think about. I want to come back to this idea that the Fed is changing its strategy a bit. I mean, it's coming from Jay Powell largely. He says before the recent events, we were clearly on track to continue ongoing rate hikes. The events of the last 2 weeks should likely result in some tightening in credit conditions. So obviously, the Fed members, they're thinking about the banking crisis. They think that might already do the job that rate hikes could potentially do as well. Again, we still have really high inflation. That's their number one mission. It's a lot of confusing signs that people are just deciding are leading to a clear message. So in this environment, outside of tech, what else are you looking at?
I mean, I don't think we're in the all clear. I think we are in this trading range for all the things that you just said, because we just don't know. We don't know what the implications are for all of these hikes that we have seen over the last 9 months, right? And it's going to have an effect. We know the economy is going to slow. How much does it slow? And we also know the bank system, there's some question marks. I happen to think the 3 banks that failed were really in poor position before all of this anyway, but that's not to say that deposits won't leave some of the smaller regional banks, but it will be to the benefit of the large banks. And I think I would be much more concerned if the large banks were having withdrawals and having some issues. They're not going to. And they are actually only going to get bigger and gain more market share. And so that's where I have been focused on. I added Bank of America last week. I added Schwab. But I also added to a couple of other companies' names that I have been involved in over the last year, some of the semiconductor companies. Because I think in tech, that's an area that actually the valuation still makes sense. I also added to Disney as well. That stock is down, almost giving all of the gains up from year to date. So I think there are some bargains out there, but I want to stay like diversified, big blue chip companies, free cash flow, shareholder value creation, that kind of stuff. It's all boring stuff, but I think in this environment where we don't have a lot of certainty in the future, I think you do want to have a diversified portfolio.
So you're echoing some of Josh's sentiments, giving credit to Josh, that it's all about companies that won't be so impacted by some of this rate situation, don't need financing, Jason Snipe. They can kind of do it on their own regardless of the volatility that we're seeing everywhere else.
Yeah, absolutely. I mean, you know, my stock summit pick earlier this year was energy. You know, I liked energy, and obviously it's underperformed. You know, but when I think about the factors that make sense to me is free cash flow, which Steph just mentioned, which I think is a big player as you're evaluating positions and where you should be. I think the supply-demand mismatch we have talked about for about 2 years is likely not as strong as it's been. We're waiting for China to come back online. A lot of the earnings growth has come from the energy sector. So for me, I still like a lot of the energy names, and on this pullback, I think they're worth adding to in some respects.